Then you prepare bank account to find out a closing cash at bank. Then you prepare debtors account to find out the credit sale. 1,50,000. Closing balance is 45,000. Difference is 1,45,000 is nothing but credit purchases. Your closing cash at bank as per the calculation is 1,34,000. Closing debtor 1,20,000. Closing stock 80,000. Hello, my dear students. I am Dr. B.S. Subramanya, called by name Dr. BSS, Professor in Commerce and Management, Vidhyaashram First Year College, a Temple of Excellence, MYSURU. In this session, I am going to hand Advanced Financial Accounting, second semester, Unit 1, Session 6 of BCom, in favor of accounts from incomplete record. I told you, it is not a complete record, it is incomplete record, means single entry. So what is single entry? For every corresponding debit, there is no corresponding credit, one-sided entry. In double entry, for every corresponding debit, there is a corresponding credit. So one debited, one credited is a double entry. One debited, no credited is called single entry, is called one-sided entry. We'll move to the problem now. The following information obtained from the books of Mr. Chidananda, who maintain the accounts under single entry system. Cash received during the year, particular debtor we receive. Debit what comes in? We receive from debtor by selling the sales in the form of cash. So we receive 80,000, additional capital 40,000. So it is coming in. Now we paid. Drawing cash is going out, wages paid, salary paid, rent paid, power and coal, sundry expenses, creditor. Then this opening balance, this is a closing balance. Creditor, debtor, stock, machinery, furniture, cash at bank. Question mark means you have to calculate. Depreciate machinery by 15%, furniture by 10%. Prepare trading and profit and loss account for the year ending 31st December 2016 and balance sheet as on that date. So here what we have to understand, when the opening balance is given, you have to prepare first one, statement of affairs on which date? 1/1/2016 to find out the opening capital. So working now. Number one, prepare opening statement of affairs on, what is the opening date? 1/1/2016 to find out opening capital. What are the first steps to do? Prepare a statement of affairs, is nothing but a balance sheet on which date? 1/1/2016 to find out the opening, because there is no opening capital. You have to prepare an account called statement. It's not a state, it's only a statement of assets and liability. You have to prepare for which date? 1/1/2016. That is the first step. Then prepare bank account to find out closing cash at bank. To find out closing cash at bank. See that your opening balance, there is no closing balance. You have to prepare bank account to find out the closing cash at bank. Number 3, prepare debtors account find out credit sales. So prepare debtors account to find out the credit sale. Number 4, prepare creditors account find out credit purchases. Then number 5, prepare trading and profit and loss account. Trading and profit and loss account. Last one, prepare balance sheet. Prepare final balance sheet. Final balance sheet as at 31st December 2016. What are the type missing? First, we have to prepare opening statement FI to find out the opening capital. Then you prepare bank account to find out the closing cash at bank. Then you prepare debtors account to find out the credit sale. What are the things to be calculated? First, you have to write here. Then prepare creditors account to find out the credit purchaser. Prepare trading and profit and loss account. Then prepare final balance sheet. On which date? 31st December 2016. These are all the things to be done. So we'll move on one by one now. So cash at bank, you have an opening balance. What's your opening balance? 45,000. Then we receive from debtor debit entry. By selling the cash sale, we receive the amount debit entry. Addition capital is a debit entry. Then drawing is a credit entry, wages is a credit entry, salary is a credit entry, rent paid is a credit entry, sundry expense credit entry, paid to creditor, creditor means paid, credit entry. By drawing, by wages, by salaries, by rent, all payment, debit what comes in credit, what goes out, paid to power, sundry expenses, paid to creditor. Add the figure. If this is added, no, it will come 5,65,000. This is only a difference. So what is your closing cash at bank? 1,34,000, which was missing. Here, see that. What's your answer? 1,34,000. This answer. Then you'll go to debtor account. What's your opening debtor? 80,000. How much you received now? Cash, by selling the sale, you got how much? 80,000. Debtor, opening balance 80,000. Received from debtor 40,000. Closing debtor is 1,40,000. 4,40,000 is the difference, is the credit sale. Difference is the credit sale. So you start with the opening balance of 80,000. During the year, how much you received? By selling a cash sale, additional capital. How much you received? 4 lakh. That's the entry here. How much you received? 4 lakh. Closing balance is 1,20,000. Difference is 4,40,000. Difference is called credit sale. This is your debtor account. Come back to creditors account to find out the credit purchases. Buy balance brought on 50,000 opening balance. How much you paid? 1,50,000. Closing balance is 45,000. Difference is 1,45,000 is nothing but credit purchases. So we find out the credit sale. We have already calculated cash at bank. Now we'll move on to statement of to find out the opening capital. Opening creditor is 50,000. Opening debtor, opening stock, opening machinery, open furniture, opening cash at bank. The difference is 3 lakh. This is only difference. Capital asset minus liability is equal to capital 3,80,000. So we calculate the capital also. Now move on to trading and P&L account. Trading and profit and loss account for the year ending 31st December 2016. We start with the opening stock of 1,25,000. Credit purchase from creditor account. 1,45,000. Wages paid 1,30,000 power 20,000. Sale, cash sale 80,000. Credit sale 4,40,000. Totally 5,20,000. Closing stock as per the problem is 80,000. If we add no, it is 6 lakh. The total is 6 lakh. Out of 6 lakh, difference is 1,80,000. This is the gross profit carried down. Your trading account is over. So what we did in the first semester, same thing, final account. Now we'll go to by gross profit brought down, salary paid, rent paid, sundry expense paid, division on machinery 15%, 22,500, division on furniture 10%, 3,000. Difference is 63,500. This is the net profit. Then final balance sheet. So we have to prepare the closing balance sheet for which date? 31st December 2016. Your closing cash at bank as per the calculation is 1,34,000. Closing debt are 1,20,000. Closing stock 80,000. Machinery 27,000. So that 27,000. This is 1,27,500. This is 27,000. Closing creditor is 45,000. Then opening capital 3,80,000 plus addition capital 40,000 plus net profit of this year 65,000. How much on 40? 4,43,500. This is 500. 5 plus 8. 4 plus 8. 4,88,500. 4,88,500. Go back here. What are the things we have prepared? You have to prepare statement of affair, you have to prepare the bank account, you have to prepare the debtor account, we have to prepare the creditor account, we have to prepare the trading account, you have to prepare the final balance sheet as on 15 marks question. First, we prepare the bank account. Start with the opening balance of 45,000. We received from the debtor. We got addition capital. Money has been drawn. Wages has been paid. Salary paid. Rent paid. Power. Sundry expenses. Creditor. Difference is 1,34,000. This is a closing balance. Then we move on to debtor to find out the credit sale. Start with the opening balance of 80,000. How much received? So we have to receive 80,000. How much received? 4 lakh. End of the year 1 lakh. So totally 5,65,000 means there is a credit sale of how much? 4,40,000 rupees. Then creditor account, buy balance from 50,000. How much you paid? 1,50,000. Gain how much left over? 45,000. Totally 1,95,000. Start with 50,000. That means the difference is credit purchases 1,45,000. Then statement of affair to find out the opening capital. Opening creditor is 50,000. Opening capital 3,80,000. Opening debtor, opening stock, opening machinery, opening furniture, opening cash at bank. Difference is 3,80,000. Then trading P&L account. Opening stock 1,25,000. Credit purchases 1,45,000. Wages 1,30,000. Power 1,20,000. Sales. Cash sale is 80,000 as per the problem. Credit sale as per debtor account 4,40,000. Your closing stock is 80,000. Totally 6 lakh. There is a difference of 1,80,000 is the gross profit. By gross profit brought down, 2 salary paid, rent paid, sundry expenditure on machinery, 15% on 1,50,000, 22,500 on furniture 3,000. There is a difference of 63,500. Then final balance sheet, closing cash at bank, closing debtor, closing stock, 1,50,000 minus division 22, it become 1,27,500. Furniture 30, how much contribution? 3,000, it become 27,000. Closing creditor 45,000. Opening capital as per the statement of a 3,80,000. Add additional 40,000. Net profit during the 63,500. How much money drawn? 4 lakh. It become 4,43,500. Total of the both side 4,88,500. Don't write debit and credit because it's a balance sheet. Hope you understand. This is for 15 marks question. Already solved 5 questions. This is 6th one which you are solving. You have to prepare debtor account. You have to prepare the creditor account. Sometimes you have to prepare the BR account and DP account. Generally, we have to prepare debtor and creditor account, statement of where, cash at bank to find out that. Easy problem now. Final account remains same as per the first semester. Only you have to calculate which are the item missing. Hope you understand that. We have prepared everything here. You understand that. If you have any doubt, you can put in the comment column. Till then, goodbye.